Good evening and welcome to virtual CPE program on mandatory use of accounting software having Audit Trail. So today we have this special program of 2 hours. May I now request our chairman to welcome the gathering. Over to chairman.
Yes, sir. Very respected speaker of this evening, C.A. Mitesh from Mumbai, Secretary of SARC, C.A. Panaraj sir from Bellary, senior members and friends, very good evening to all of you. Today we are going to discuss the two important topics. First one is very important amendments in the Companies Act 2013. So originally it will be applicable from the current year, but yesterday the government postponed the applicability to the next financial year. So now we have 1 year time to practice and update ourselves and know about the various accounting software and audit trail features. The second part of the program, which is relating to GST, invoicing and the key issues. On behalf of SARC, I welcome the speaker of this evening, C.A. Mitesh. Once again, my appreciation to each one of the participants for our continued support and encouragement to SARC. On behalf of SARC, I welcome you all for this important program. With the gracious presence of our today's speakers, the participants will have yet another lively evening session and a feast of knowledge on the respective subjects. On behalf of SARC, I express our sincere thanks and gratitude for the speakers for sparing their valuable time to be here. Yesterday, we had the grand inaugural program of 70th year of SARC. We had very impressive session addressed by our tax guru, Dr. Giri Saguja, which is jointly organized by all the regional councils of ICA. So almost more than 4,200 members participated for the event. Friends, we SARC lined up various programs throughout the year. I hope this year will be the year of celebrations, and I am sure we should work together for the betterment of the profession. And I look forward to our support and contribution to make SARC a flourishing year in its activities. With this, I request Secretary of SARC, C.A. Panaraj sir, to introduce the speaker of this evening.
Sir,
Please unmute, sir. Panaraj sir, please unmute.
Thank you very much, chairman, for setting the tone for the day. And I take the privilege of reading out the profile of C.A. Mitesh Katira. Sorry. So C.A. Mitesh Katira is a tech-savvy professional with more than 20 years of accounting and auditing experience. Mitesh has been speaking at various professional and trade bodies about technology enablement and forensic audits. In this lockdown, Mitesh contributed an ebook on work from home, ideas for accountants, published by a reputed publisher, CTC. Thank you very much for accepting our invitation, sir. Floor is yours. Thank you.
Thank you, Panarajji. Thank you, Jalapati. It is always a privilege to be participating in such webinars as a panelist and contributing back to the profession in whatever little manner possible. This is one of the opportunities that you have created for me, and I'm very thankful for the same. Of course, I'm also thankful to the audience who have shown interest and love for this subject. I'm able to see around 286 attendees have joined for this webinar, which means there is a lot of interest in this topic, and people want to know more about the topic per se. Of course, I will also want to thank the technology which has made this possible, wherein I am sitting at Mumbai and you are sitting at Jalpati is sitting at Coimbatore, someone is sitting at Panarajji is sitting at Bellary, and so on. So it's an amazing evening. It's a technology sunrise. So while there is a lot of issues with respect to Corona, we chartered accountants have picked up technology very well. and kind of being more appreciative about the possibilities which the technology can offer in the current scenario. And going forward, I think there is a new dawn that we will all see, wherein everything will be completely different as against what we envisaged 2 or 4 years back. So yeah, so it's amazing time. Let's start the topic proper. Uh, the topic given to me is the audit trail compliance for the companies, which is of late being discussed in the social media, in the newspapers, in all the LinkedIn, your WhatsApp, and so on. And a lot of chartered accountants are interested to understand as to what is this new discussion around the audit trail. We as chartered accountants would have studied audit trail way back when we were actually doing our qualification as chartered accountants in our subject of audit. But have we really understood the audit trail? Have we really analyzed the audit trail? What is actually the audit trail? How it works, and so on. So a lot of questions in people's mind, although the audit trail has been a common subject and we have all heard about it for a while. So let's look at the agenda for the evening and find out what all we are going to cover in the session. First of all, the MCA notification, the legal side of it. What is the audit trail? The benefits of the audit trail. What are actual benefits of the audit trail? Although we always see the compliance as the issue and we always see it against the fraternity and against the profession, but many times there are a lot of benefits hidden in the compliance. So let's understand the benefits also, and let's also understand few of the accounting tools and softwares which have features of audit trail already existing, and what are those and how they perceive audit trail to be, how the accounting softwares perceive the audit trail to be. We would have all worked with various softwares all throughout our careers, from Tally to Zoho to ERPs, Oracle, Microsoft Dynamics, Microsoft Navision. We would have worked with various other tools and systems all throughout our accounting and auditing career. So let's explore them from the audit trail standpoint and how they work. We'll also try to show you some practical examples of how they work in this discussion, and of course we'll conclude with what the chartered accountants or company or the accountants should keep in mind with respect to audit trail, and what should be the deliberation in the office with respect to the maintenance of audit trail. So let's look at the MCA notification which has come on 24th March 2021. When you look at the notification, it says that the notification provided that for the financial year commencing on 1st of April 2021, every company which uses accounting software for maintaining its books of accounts shall use only such accounting softwares. Only means only such accounting softwares which has an audit trail. So basically it is recommending that if there is no audit trail in the accounting software that you are currently using, might as well you need to change the accounting software. So it is being prescriptive about the software requirements for doing the accounting. And it also says that feature of recording audit trail for each and every transaction, number one. Number two, creating an edit log for any change or each change made in the books of accounts along with the date when such changes were made. And third is ensuring that the audit trail cannot be disabled. The audit trail should continuously be enabled, and it should keep on recording the log and creating a log which will stay back with the company even after that year is over. So basically retention of audit trail, maintenance of audit trail, and no possibility of disabling the audit trail is being discussed in the provision. One thing is very, very clear here. This is applicable only to the companies and not to the LLPs or private proprietary concerns or partnership firms and so on. So this is applicable to all the companies which are covered by the Companies Act 2013. Next point is with respect to the amendment in the audit and auditors rule 2021, which is talking about one more addition called as point G, wherein it says that the auditor, whether the company has used such accounting software for maintaining its books of accounts, which has a feature of recording audit trail, that is edit logs facility, and the same has been operated throughout the year for all the transactions recorded in the software. So basically, he's putting a lot of onus, this notification, on the auditors, that is we all who are auditing the books of accounts of the companies, that you will have to actually check and verify whether the audit trail feature is there in the system, number one. Number two, it is enabled in the system. And number three, it is not being tempered or changed during the financial year, right? And preserved by the company as per the statutory requirements for record retention. So this is the onus that is being put on the auditors. And there is one very hidden onus that I feel is put on the auditors, is with respect to checking the audit trail and what are the major changes that have happened or amendments that have happened in the books of account in different time frames and how they have impacted the disclosure in the books of account. So I think that is the hidden responsibility here, which has been cast on the auditors while talking about the software and the feature and maintenance and retention of the audit trail. So it has actually increased a lot of weight on the shoulders of the auditor. The beauty of this is, as of now, this has been postponed by saying that the notification will be live or effective from 1st of April 2022 and not from 1st of April 2021, which was actually been released on 23rd of March 2021. So there was a lot of hue and cry around the request to the government for delaying or postponing this notification, number one. Number two, the groups were discussing yesterday. I had the similar session or an opportunity to talk in the WIRC, that is the Western India Regional Council, and there was a discussion which was being done by the Central Council member Srinivas Joshi about doing a representation with the government and setting up a group and talking to the government about the requirement of the audit trail, the severity of the audit trail, the expectations from the industry about the audit trail, the expectations from the auditors about the audit trail, and telling the government to postpone or requesting them to postpone it for one more year or at least give relief to the turnover below certain limits, say 10 crores or 20 crores or 15 crores, 5 crores and so on. So a lot of these discussions and debates were happening in the industry. Also, the software industry was awake in the night and trying to figure out how they will prove themselves right with this expectation of the maintenance of the audit trail. So a lot of debates and discussions were happening in the software space as well about this audit trail. A lot of software companies were launching webinars, discussions, setting up blogs, and also launching videos with respect to the maintenance of audit trail, which has become a hot topic of discussion all across the software industry. But to the sigh of relief that this postponement has come, yesterday evening with respect to the date effective, that is 1st of April 2022. I spoke with Mr. Jalpati about the same, and he said, no, we will continue the webinar, and we will kind of educate the members about this change, and kind of tell them that this is going to happen, if not today, tomorrow. We need to be prepared, and we need to be preparing our clients with respect to this change, and that's why we are here. Let's go to the next slide. What is the audit trail? I think this is a very, very interesting question. Audit trail, in simple words, means activity log. Basically, all changes happening in the software has to create an activity log file which gives complete details of who has made the change, when were the changes made, what were the changes, what is the applicability or impact of that changes, and can these changes be disabled. So basically, audit log means who has passed their entry. Say we are talking about an entry of sales of 1 lakh rupees. Who has passed the entry, A or B or C in the organization? Number 2, when was that entry passed, and what exactly was the detail that was punched in the entry. This is about the original entry. Now when this entry or an invoice was edited from 1 lakh to say 1,05,000, the question would be, what has changed? So we will say the change is from 1 lakh to 1,05,000. That is, the sales has increased from 1 lakh to 1,05,000, and thereby the customer account has increased debit of 5,000 rupees. Before this it was 1 lakh. Now the customer's receivable has become 1,05,000. So that is the change. Now when the change happened, say for example the original invoice was passed on 31st of March, but on 1st of April we came across an error in the calculation for the sales and we changed the entry. So the entry actually changed on 1st of April. And who made the changes? The accountant actually punched the sales, but the owner came across the issue of the calculation and he actually made the change. So the entry should show that the changes were made on 1st of April. The amount was actually changed and the owner of the organization actually made the changes, or the director of the company has made the changes. So this is the requirement of audit log. This is very, very basic, very, very fundamental requirement of the audit log. When you look at the benefits of the audit trail, we can count it on this slide. It says user accountability. The accountability of user goes to the next level. There used to be a lot of issues with respect to changes made in the books of account, and we used to toggle around and say who has made the changes, because everyone used to have the password. Now it is very, very user driven. Each user will have a separate password. He will do the entry from his user ID and password. So there is more accountability. There will be more transparency. A lot of mergers and acquisition expectations are there in this country, and they don't happen because of lack of transparency in maintenance of books of account. Once the audit trail is enabled, a lot of transparency will go up. The reliability on the books will go up by the investors, by the strategic partners, by the bankers, by the government authorities, and thereby the transparency will go up. There is a third very important thing, that is reconstruction of the entries. We do a lot of fraud investigations and forensic audits. In the forensic audits, one of the very, very important aspect of our verification hovers around the audit trail, and it is very critical that we understand the audit trail and we try to find out and reconstruct the real books of account after looking at the audit trail, and in the form of software, hardware, hard copies, chits and other details, Excel sheets, files, and try to find out what is actually the books of account of the company. So now this is becoming part of our activity as well as the auditors. Then record integrity, it increases the integrity of the record. The quality of the recording goes up because all the while people try to book the entry right at the first time instead of keeping on toggling around with the entry and trying to create suspense accounts and trying to store the details in the suspense account and then keep on playing around with the numbers. Third is accuracy. Fifth is accuracy. Sixth is security of vital information. A lot of information will get secured, but there are certain challenges with respect to the information that is getting secured. The database may pile up. There may be 3 or 4 or 5 records which are kept for one record. Whenever it gets edited, all the time these record trails are created. And lastly, there will be records for compliance. The GST, the income tax, and all such compliances will become very, very easy and simple. And the government may call for the audit trails for actually doing the investigation and detailing about the real transactions that have been carried out in the books of account. So a lot of benefits come out from maintenance of audit trail to the the directors of the company, the stakeholders, the bankers, the investors, the government authorities, and so on. So there are a lot of benefits apart from issues of maintenance of the audit trail. Now let's look at few of the softwares or the tools which talk about the audit features. So here is a quick list of tools that we have covered. We have tried to cover these tools because they are quite popular, and most of the people, most of our accountants and the CA fraternity has been using these tools for accounting, auditing, MIS, and so on for a long while. There is no intention here. I want to give a disclaimer of popularizing one product over the other or recommending any product which is better than the other product. That is not the intention of our discussion. We just want to give you a overview on which products already comply with the requirements and which are yet to comply, and which need what type of changes to adopt to this requirement of the audit trail by the MCA. So that is the only intention with which we are displaying these products, and there is no intention to actually promote or talk about any of these products or being biased about any of these products. So let's go one by one. One is Zoho Books. Second is QuickBooks. We have also talked about Tally. We have talked about the Microsoft Dynamics AX and the SAP, which has been very, very popular. Now let's start with the Zoho Books. The Zoho Books activity log is quite exhaustive and detailed, and the beauty of the audit log that Zoho Book already maintains before any recommendation from the government is name of the users who are creating and modifying the entries at all given point in time. It keeps the log of all the modifications that have happened and not only one modification. The second is it also maintains the date and the time. Now the good part is it is not only maintaining the time, it is also going ahead and trying to maintain the date of such change, time of such changes, and when they have happened. Third is multiple versions of same transaction. So the same transaction has multiple versions that are say 5 or 10 or 20 versions which are created after the user doing required changes in the books of accounts again and again. So it retains the details of all these 20 versions, and it gives a nice comparison of any of the 2 versions that the user wants to check. but it doesn't give comparison of all 5 or 10 versions which have changed parallelly. And lastly, it also gives old values versus the new values. Now let's actually practically look. We have selected Zoho Books to actually show you the demo as to how actually the audit trail looks in the software. I am sure many of you would have looked at it, but it's very simple and easy. So that's why we brought it for you live. This is dummy data. So there is a disclaimer that there is no real data here, and it's just for the sake of demo that we have created some entries and want to show you what is happening. This is the actual screen of the cloud-based Zoho Book accounting, and there is a tab here which calls as reports, and in the reports tab there is something called as activity tab, and in the activity tabs there is something called as activity log. In this activity log, you can select the month, the year, the number, the day on which you want to check the activity log, and it will give you all the details about the entries and the changes made in the books of account. So here is one of the entries, that journal entries that we have selected, and we can see that this journal entry has been edited 1, 2, 3, 4 times, and we can see that the edits have happened on 31st March, 8:35, then 8:38, 8:41, 8:42. So there are 4 times the timings have been also shown when the changes have happened. Actually, we have done this as a dummy transaction. That is why all the dates are, all the timings are near to each other. But in genuine data entries, there are a lot of errors and issues. So maybe the entries may be passed later on or before the transaction happens. Here is a nice report which is been seen here, wherein you can compare the entry 1.0 and 4.0, 2 versions, and you can see that yellow means modified, pink means the one which is changed, and third is new added, sorry, removed and added. So modified, removed and added are 3 colors, and you can see in the entry 1, which is the original entry 1.0, and 4.0 what has been actually changed, by seeing that what has been added, what has been removed, and what has been modified. So this gives a clear idea that this petty cash part has been added, the name of the person has been added, the amount of 500 has been added, and this narration or the note has been modified, and even the the last part, that is the documents, that is you have added a physical scan copy along with the entry. That is why that is also seen as added. So this is how neatly the audit trail is not only maintained in the softwares, but also it is been described and neatly explained in the reports for the users to make sense out of it, right? So this is one of the demos that I wanted to show it to you, and explain you what is the audit trail and how it is maintained. Now let's go to QuickBooks. This is also very popular software. It has been very popular in the US. In India, we know QuickBooks by Intuit also. So QuickBooks is maintains something called as audit log in itself. It gives the date of alteration of any change, name of the users, category of change, vendor, customer, data altered, and also gives unaltered voucher details with dates and amounts. So it also gives quite exhaustive list of changes that have been done in the transactions during a particular period. However, I think it doesn't give the comparison of 2 entries and explains as detailed as what we saw with the Zoho Books. Now let's go to something called as Tally. Tally is the most popular software used by the accountants in India. It's a on-premise software, and now they have released something called as Tally Prime. Tally maintains, Tally has a feature called as audit features, Tally audit features. When you enable the audit features in Tally, Tally will start giving you details about the user who has altered, opened the vouchers, and who has lastly modified the vouchers. So there is no detail as to what was edited, when it was edited. It just gives the details of the users who have done it. And hence by default, Tally actually looks like not being able to comply with the provisions of MCA. Excuse me. So with the current version of Tally, we can clearly make out that it is able to give you the accountability side of the changes that have happened, but it doesn't give the how, what, when, etc. of the changes that have happened. However, when we looked at the database of Tally, we could find out that Tally is also tracking a lot of details and data inside its system, which is not visible to the user. So there are a lot of TDLs, that is the Tally developer language tools, which are being given in the Tally shopper, which are available at quite a cheap rate and could be installed along with your Tally license. Once these are installed, they can give a lot of details, like we have attached the snapshot there. So many who are using Tally may think of going for a TDL if the applicability is urgent. And we are sure that Tally is working on giving this as a standard feature with the new requirement being pop up by the government. And we will soon see some things coming up at Tally level as well for the audit trail maintenance. As of now, we can just show you the standard features. When you enable the what you call the audit features in Tally, how the screen looks in Tally. Mehul, can you show the
Yes, I'll show, I'll
screen?
open that. Until that, you can proceed to next part. I'll just open it and inform, then you can explain it.
Okay, fair enough. So we will move to the next tool. Till such time at the back end, Mehul is trying to open the demo Tally, and then we'll see the demo Tally. Yeah, so we look at the Microsoft Dynamic AX, which is one of the popular ERPs being used by the medium and medium to large organizations who deal in manufacturing and trading primarily. The Microsoft Dynamic, being a proper ERP, has something called as audit history. And the beauty of Microsoft Dynamic versus the other tools is it has no option to disable the feature of Audit Trail, but it keeps on capturing the data at the back end all the time. Maybe one may see the report, or one may not see the report, and this is one of the requirements of the MCA. So change date, changed by, event, change field, old value, new value. So it gives all the details about the changes which are required, and it looks like complying with the MCA requirements. There is something called as Microsoft Navision, which is also Microsoft Stack ERP. Even that has the similar features of Audit Trail, and it also calls itself as Audit History, and I think it is also one of the tools or ERPs which have majority of the things which is expected by the MCA as of now. Now let's look at the SAP. So SAP B1 is the Business One edition of SAP, It's a very basic SAP which has been launched a few years back for the small and medium enterprise. And most of the clients which our fraternity is auditing would have SAP B1. SAP R3 is a quite exhaustive tool which has a lot of more features on the Audit Trail, but even the SAP B1 has very nice features of Audit Trail. The SAP B1 calls these features as change log, and these logs cannot be disabled, so they are always on kind of logs, and they keep on tracking the date changes, the field changes like tax values, total document values, cancellation date. If at all the voucher is cancelled, it will also give you the date on which it cancelled, previous vouchers, new values, usernames, that means who has changed, right? So SAP maintains quite an exhaustive log. SAP V1 also maintains a lot of details about the changes that are made, and it looks like it is the one of the compliant tools as prescribed by the MCA. Let's go to Tally now and see practically how Tally looks in its original avatar. So without attaching any TDL, Tally can give these details. Again, it is a dummy transaction that has been created just to show you what are the how it happens. So it gives the details of who has entered the transaction. That is, say in this case, Prachi has entered maximum number of transactions, so it is showing the name of the person who has done the entries, and it will give you the details of someone else, like Bharti has entered this transaction, or the other transaction, that is Bombay Cycle Manufacturing, is also entered by Bharti. So this is how it gives the details as of now of the users who have been entering the details. But be aware that the users required to be created in the system, number one, and number two, the audit log has to be enabled, or the audit features in the Tally need to be enabled to actually start showing this report to the user. It is not automatic that it will start happening. So that is, there is some configuration that is required in the Tally to do both these things, that is show the user names who are actually editing, and also to enable the audit log. Let's now look at the summary of all the tools that we discussed. Of course, Zoho Books, QuickBooks, Tally with an add-on, Microsoft Dynamic AX, and SAP V1. So this is very broad summary. Again, no intentions to actually promote or demote any tools or softwares. It is just an independent assessment or understanding that we want to bring on table for everyone. Now, lastly, we look at points to be worried about on the MCA notification. We being the auditors, lot of onus is on us, not only to vouch whether the audit trail is maintained or not, but to actually get into the audit trail and give our analysis on the majority changes that have happened and the genuinity of the changes that have happened, and there is no intention to forge any information or misrepresent anything to any of the stakeholders. So that is, of course, a natural responsibility cast on the auditors. The other changes, other points that we wanted to bring to your attention is changes in the books of account can also be routed through database directly. So nowadays, lot of frauds or lot of misrepresentations happen directly through the changes in database. So no need to actually edit any entries, but go into the database backend and change the stuff, and thereby create wrong reports of P&L or balance sheet or cash flows or costing sheets or bill of materials and so on. A lot of these can now happen with the help of changes in the backend database by an expert hacker or anyone who is good at understanding the stuff with respect to technology. Another very important point that I feel I should be talking about here is we as a fraternity have been discussing and trying to grapple around and actually try to learn the audits on the information systems, which is one area which has been so I did my ISA, that is information systems audit, right back in 2008 when we were actually discussing as to whether this ISA, that is the information systems audit, or the diploma in information systems audit, whether it will carry any value anytime in future with the current kind of setup and situation. But I am now clearly able to see a lot of value in our understanding and learning of technology that we did with the ISA, DISA, etc. And it will come very handy for the auditors to actually do the analysis. I have also come across a lot of big fours and large audit firms doing audits of larger organizations, and they call for this ISA audit to be conducted before the actual audits of books of accounts start, and they want a comfort letter from the information systems auditor to tell them that the technology has been properly used and there is no fudging of the databases at the back end before they actually jump into the numbers. So yeah, so there are a lot of opportunities that will be created of such kind for the new generation accountants and chartered accountants. And technology again is going to be at the forefront of the entire change management that is going to happen in the next level. So it is becoming very, very critical for the chartered accountants to understand, learn, absorb the technology element. Next is audit log changes made directly to the database is never available at the front, and the process itself has been bypassed. The entire process is bypassed, and that is why many times these database changes don't appear in the logs which are maintained or reports which are created. Next important thing is the audit trails are stored on the database level. So the auditor has reads the audit trail, but how will the auditor ensure that the audit trail has also itself not been fudged? Many times the audit trail itself can be fudged when the the fraudster or the person who wants to show the defined picture of the details, he may actually go back and fudge the audit trail itself and show a wrong picture of the audit trail to the auditor or the stakeholders. So how will you mitigate that risk? Next is some companies are heavily dependent on IT and could have date and time manually set. How will the auditor come to know if this is done? Right? So most of the softwares have a tendency to pick up the system's date and time and give the audit trail according to the system date and time. The system date and time can be manually changed by a person who wants to do any kind of fudging with the details. And if he changes the audit time, the date and time of the system, for example, he is actually amending an entry on 2nd of April, which is pertaining to 31st of March, and he actually goes and changes the system date and time to 31st of March and passes the entry. Most of the accounting softwares would recognize that the entry has been passed on the 31st of March and not on 2nd of April. So this kind of changes or fudging of the information is easily possible, and there is no way in which the auditor will be able to ensure that these kind of things have not been done with the data that they are reviewing, and they are confidently saying that the audit trail has been maintained, the audit trail has been retained, and the audit trail is as per the requirements of the MCA. Lastly, changes at the master level. Now we are continuously discussing about transactional changes. If the change happened at the master level, imagine the change happened at the level of chart of accounts. That is, some of the receivables are pulled and put as advances, or some of the transactions of the vendors are moved from name of the vendor X to vendor Y, or the what you call the aging is changed, or outdatation of a vendor is changed by actually changing the credit limit or the time frame of the vendor in the master data, and thereby not generating any exception reports. So such kind of master changes have a lot of impact on representation, like asset master has been fudged or inventory master has been fudged and something has been changed from one to another, or a bill of material for that matter has been changed and it passes automatic entries in the system and creates the uh, cost of goods sold, which is not in line with the real cost of goods sold. Nowadays in the ERPs, a lot of automatic entries are also passed in the system, and the system logs may bypass the changes which have happened in the at the master level. There is one more level of changes which is worth discussing, that is the configuration level changes. Many times these configurations are fudged in the system. Uh, for example, there are systems which are internationally used by the multinationals, and they are put on some server which is located in the other countries, and entries are passed sitting on the VPN of that server. So many times the time zones are different, and the entire calculation or the entire trail looks wrong when you see from the India perspective. So such configuration changes, or creating the reports with LIFO method instead of FIFO method and showing wrong inventory valuation, is a configuration change. Or trying to generate a report of a particular um, SBU, that is the business unit, with a particular cost looking like an indirect cost instead of direct cost, or changing cost centers at the back end of a particular cost and making them look as corporate cost instead of looking as a what do you call the cost of the SBU. So these kind of changes happen, and in the investigations we have found that a lot of these configuration changes impact on the disclosures of the data in the reports that are getting generated, and they create defying views for the you know the users of these accounting statements or reports. So I will call these as a kind of a forgery or issue which should be also considered while maintaining the audit logs. Yeah, so I think more or less we have covered all the aspects of the maintenance of audit log or audit trail that is being discussed in the recent notifications. Good part is we have got a while now, that is almost an year, to be ready ourselves and also make our clients ready with the requirement of the MCA. I'm sure Modi ji is very aggressive and would want to come up with these changes very fast, and he will not keep on postponing this for eternity. So it's a good idea for and a good time for all of us to start preparing and working on it. With this, I will thank Jalapati ji and Panna ji for giving this amazing opportunity, all the office bearers, of course, of SIRC, and of course the audience who has been patient and keen to understand this aspect even after they have been given the time frame of one more year with respect to these changes, and still they have given a patient hearing. As of now, I can see that 413 attendees are attending the webinar, which is very, very amazing, and I am sure it would have gone above 500 in between and come down. And the administrator has changed the size from 500 audience to 1000 audience in between, because he wanted to give space to more to join and understand this aspect. Thank you very much, and I wish everyone safe, health and pleasure all the time. And I hope that the country will come out with this from this pandemic in a real powerful manner, and we will see the new dawn or the light at the end of the tunnel, and we will make amazing bounce back, so to say, from this entire issue which the world is facing. Thank you, everyone.
So question answer, we can take it now, sir, or 4 to 5 questions are there.
Yeah,
Sure.
we can take it, Selva. We can take it. Very
Yeah,
few
I'll
questions.
compile it. I just flash the screen. I hope my screen is visible, so I'll just take it.
Yeah, visible, visible.
Can you read out for yourself or shall I read for you, sir?
No, I can read out. I can
So,
read out.
sir, you can read out, sir. Or
Okay.
if it is convenient to the speaker.
Yeah, I can read out. There is no problem.
Yes, sir, please.
So the first question is, may we know, do we need to maintain audit trail for transactions also along with the edit log of balance changes? In other words, I want to understand that if we track only balance changes, balance change audit trail, that should be sufficient, or we need to take full trail, that is transaction and its accounting. I think the expectation is at the transaction level. So not at the change level of the balance. It is sufficient to maintain the trail. It is very important to maintain at the transaction level. So one should be able to go back from the balance change to the transaction level change easily. And that is why the expectation is to maintain at the transaction level. Can we expect any guidance note from ICAI on the addition of new clause? New clause requirement requiring auditors to report on the accounting software. Yeah, definitely. The ICAI will work on the guidance note, and it will come out with the guidance to the auditors as to how they will handle this and how they will put it in the disclaimer, and how they will be able to explain, and to what extent they will be able to give confidence to the reader of the accounts about the audit trail aspect. Definitely there will be a lot of guidance on that side. In fact, this is also an ICAI initiative. They've already started giving guidance, not formally, but in the form of bringing people to talk about this topic, and a lot of debate and discussion has already started. Third is, it is necessary to use accounting software for companies. Suppose if the company is maintaining accounts manually, is it necessary to change to the computerized accounting system? How we can know that audit trail is enabled throughout the year? A very nice question. I think there is all the companies are required to maintain accounts in digital form only. So when you read the accounting rules which have been prescribed by the companies, it is required to maintain books of account in digital mode and keep it available in the Indian geography for the people to analyze as and when they want to do it. So I think maintenance of vouchers, yes, it continues to be manual, but maintenance of books of account per se, that is the entries of debit and credit, are required to be done in the computerized environment. Number two, we as accountants will have to learn technology to actually understand whether the audit trail was enabled all throughout the year. That is why we were discussing about the configuration log. So apart from the audit log, that is the transaction level data of the changes that have happened throughout the year, one will also need to know about something called as configuration log, and would be required to analyze the configuration of changes that have happened during the year. And one of the change can be enabling and disabling the audit trail. This is also a configuration. So if that configuration is changed during the year, one may consider that the audit log was either fudged or changed during the year, and one may give a contrary opinion in his audit report. Fourth is, while audit trail and audit logs may be available, please suggest what kind and how to take exception reports from the systems. This is a subject of software. So each and every software looks at audit trail in a different manner. We saw how Tally looks at audit trail. We saw how QuickBooks look at audit trail. We saw how Microsoft looks at audit trail. We saw how SAP looks at audit trail. We saw how Zoho Books look at the audit trail and so on, right? So it's a software subject as to how to take out the exception reports. As of now, I understand only SAP has got exception reports with respect to the audit trail. Tally has got something called as exception reports in itself, but those exception reports are more generic than audit trail related exception reports. So a Tally will say how many transactions about 10,000 happen in cash. This is not something called as audit trail. It generates a lot of exception reports, but those are not audit trail. How many transactions happen with respect to one of the parties on a single day? This is not a audit trail related exception report. Yeah, Tally gives a lot of exception reports, but they are generic exception reports. They are not audit trail related exception reports. But I'm sure a lot of softwares will come up with audit trail related exception reports, wherein they will say the day on which maximum number of entries were changed, or it will give you the details of the vendor or the customer in which maximum changes happened during the year. It will give you a ledger in which actual changes happened during the year. So this is very, very important. So over a period of time, a lot of these reports will come live, and there is a lot of competition in the software industry, and they will definitely come up with a beautiful presentation to the auditors to analyze the exceptions in the audit trail, and thereby do the needful or make their opinion stronger and firmer than it would have been otherwise. Whether focus software meets the requirement of MCA notification. Yeah, I have seen focus software. That is a nice software, but I have not seen the audit features or the trail features of the focus software. I would not want to comment on the focus software per se. Notification at present covers all companies, with the possibility that the government may come with a threshold of small. And yeah, we discussed about this. The government is getting a lot of representations. Of course, the representations have got a bit what you call easy now because of the 1 year time that is made available. But yeah, like e-invoicing, which is the next topic, they came phase by phase manner. They may, in the audit trail also, they may come phase by phase manner and tell the SSEs to adopt to it. But having said that, I would request or recommend all of you that why not to start working with the clients and make them compliant with this change even faster than the MCA requirement come. It is in the benefit of the auditors to that the clients maintain a proper audit trail. What will be the penalty for non-compliance with the audit trail? Clarity on time frame, and does it mean that so whatever is the penalty applicable to the changes to the rules which are covered under the accounting rules and auditing rules will be applicable to the non-maintenance of audit trail, and the biggest impact to the companies will be qualification in the audit report or mention about the softwares being not properly handled. So I think they may come up with a softer note on actual impact of penalties on the non-maintenance of audit trail, but definitely the companies would not want any kind of qualification in the report, and that is why they would be interested to maintain proper audit trail and comply with the MCA requirements. Working on provide that for financial year commencing on or after first day of April 21, every company which uses accounting software for maintaining books of account. So does that mean very small companies where there are hardly 50-60 transactions in the year, I can use Microsoft Excel to maintain? Yeah, you can definitely use Microsoft Excel to maintain books of account. But now the challenge would be whether the Microsoft Office is able to maintain the history. and the government is coming very clear and saying that you should use the software which is able to give you the feature of maintenance of accounting or the audit trail, right? So it is very clear that Microsoft Office goes out of the window to that extent of actually maintaining books of accounts with the audit trail. So I think now the companies would have to go back and use any of these basic cloud-based small-time softwares which provide with the features of audit trail. I think I would have answered all the queries. I think I will conclude the session. Thank you again for giving me a patient hearing and showing a lot of interest and love for this topic.
Thank you very much, sir, for your tech-savvy presentation. We are very happy that the chartered accountants are so capable in technical field also. Very few of you are there, and you are one amongst them. Definitely, we are very happy. And if there is necessary, we will come back to you once again.
Sure.
Anyway, this is postponed, and we will come back to you for presentation once more. Thank you very much for the time. May now, shall we go, Chairman, for the second session?
Yes, sir. Yes, sir. We will go, sir. We will go.
Now it is already late for the second topic. Second topic for the day is e-invoicing key issues and impact. CATR Srinivasan from Chennai is the speaker. I would take only 1 minute to just 1 minute to introduce him. He's a fellow. TR Srinivasan is a fellow member of the ICA. He's practicing for the last 10 years, focusing on the matters relating to risk advisory, goods and services, and litigations. He is an advisor to leading corporates and MNCs in the above matters. And he is an All India rank holder in ICA examinations and also college first rank and gold medalist in BCom from Vivekananda College, Chennai. And he is he's a partner in NV Balaji and Chartered Accountants Chennai and heads their GST team. And he is also associated with so many associations, including a member of the study group for implementation of GST ICA of the Institute of Chartered Accountants of India. With this brief introduction, I request Srinivasan sir to take over the proceedings. Please, sir.
Thank you so much, sir, Panaraj sir, as well as Dalapati sir for the introduction. And thank you so much for the opportunity to share my thoughts on the GST. I hope my voice is audible.
Right, sir.
Yes, thank you so much. Yeah, so the topic is more related to e-invoicing, though the topic primarily looks like GST related. But then my co-speaker, Mitrajiji, has put it rightly. Audit Trail has already been started. I mean, though we are looking at Audit Trail being started from 1/4/2022 now, Audit Trail has already been started with having GST in place. I would like to quote 2-3 examples in this regard where the Audit Trail has already come up. One is, of course, most of us are aware that in GST, once an invoice is recorded in the GST returns, there can only be it cannot be deleted, but rather it can only be made 0 or it can only amend it. So the Audit Trail has already started there, time 1. And then the government is clear from the day 1 that they would like to have the Audit Trail present. So the second important place where they kept the Audit Trail was in the context of e-invoicing segment. Of course, from 1st April 2021, most of my fellow members know that it has become mandatory for companies, entities having turnover more than 50 crores in any of the previous financial years. But then I just would like to touch upon few of the key, statistics before I can move forward into the discussions. Yeah. So just a minute, I'll. I hope my screen is visible here.
Yes.
So
yes.
Yeah. So what is the impact we are looking at? E-invoicing is something which we always assume it as a software related point. But then the Audit Trail and some key stats just to throw our mind into why this is quite important, and Audit Trail is quite relevant here. One important issue which we have is that if we don't have an invoice in place, which is supposed to be an e-invoice, let's say a particular taxpayer has to generate an e-invoice, but rather he has not generated an e-invoice, one most important thing is that the recipient is going to lose the input tax credit because it will never be considered as a valid invoice. So the concern is not only for the supplier who has crossed the 50 crore limit, but rather the concern is also on the recipient to ensure that all their suppliers are giving a properly signed e-invoice with them. This is the first concern. So it's not only for the supplier. It means if there's a recipient who is receiving from a bigger supplier, then he also has to be worried about it because his input tax credit is at stake. Number one. And the major second issue is that if there is no e-invoice in place, then the law treats it as an invalid document. Specific rule 48.5 says it's an invalid document. So it means if any movement is happening across from one location to another, it will be treated as a movement without valid documents. Even if they physically carry one invoice, if it doesn't contain the IRN number, if it doesn't have that reference number mentioned, then naturally it will be treated as an invalid invoice only. It means it is not considered to be a valid document. In such case, the penalty, and of course it will be liable for detention and seizure. The most important significant change the government made in this budget, though of course all the state governments are yet to notify the GST amendments. One significant change they made, which has a big impact on day-to-day business of the taxpayers, could be on the penalties and taxation provisions related to detention and seizure. Let's say there is a material which is moving, which is having an invoice, but then it is required to have an e-invoice, but not so. E-invoice is not mentioned. In such case, the present penalty as the law stands today, though Finance Act 2020 is there, the effective date of the notifications are yet to be notified. So the present taxation regime says you have to pay a tax of 100% and a penalty of 100%. Let's say if the amount of invoice is for 10 lakhs, the GST amount is 1.8 lakhs. You need to pay 1.8 lakhs of GST and another 1.8 lakhs of penalty. So what we used to do is that the 1.8 lakhs of GST which we pay, we used to adjust it against our subsequent month liability whenever we declare the invoices. However, penalty, of course, is a cost which may be appealed, etc. Now, the amendment which has now been made, the proposed budget, is that there is not going to be any tax component, but rather the penalty will be 200% of the tax involved. It means in our same example, we are going to pay 3.6 lakhs rupees, but the entire 3.6 lakh rupees is going to be only a penalty component. There is no tax component involved in this case. So one side effect of not having a proper invoice could be there is going to be double taxation, double tax as going to be the penalty. And normally what we used to do is that, let's say if there is an order which we are going to appeal, if we are going to go for an appeal against this order, then there is a specific provision in appeals to first appellate authority for pre-deposit. Now that pre-deposit was 0% in case of penalty. If the issue was only with respect to penalty, the pre-deposit was 0%. But then the amendment made is that we are going to pay a pre-deposit of 25% of the penalty amount if the penalty is in relation to the detention and seizure of the goods on way. So it means basically, to put it simply, in our example, 3.6 lakhs is going to be the penalty. And if you're going to prefer an appeal, then 90,000 rupees you have to discharge as pre-deposit before going on appeal. So it's quite important or relevant that the supplier complies with the e-invoicing regulation, both for the benefit of the supplier and also for the benefit of the recipient. And of course, business reasons are also involved. So we all know some of the key stats. 1st October 2020, we had more than 500 crores. Then it became 100 crores in January 2021. And of course, the government has now brought to 50 crores, more than 50 crores. 1st April 2021, that is from yesterday onwards, it has become effective. But one of the key things is that it has worked, I would say, more seamlessly. I mean, we don't find, though of course, the number of taxpayers above this range, the government is trying to basically identify those taxpayers who are less in number, but rather contribute more in terms of GST contribution. Hence, the government has basically picked up 500, 150. And of course, we don't see much of a, there are breathing challenges, but then we don't see that as a significant issue as it stands today. And the next question which came up was, my turnover is, I am doing 99% exempted turnover. I am doing exempted supply. But then a very small portion of my supply is a taxable supply. Then should I have e-invoicing in place? Of course, yes. So the question is not about exempt or taxable. The law uses the word aggregate turnover. It naturally means we should take both taxable, exempted, all put together for the calculation purposes. So you have to generate an e-invoice, provided it is a B2B transaction. So let's say if it is a B2C, I'm doing 100% B2C only, then of course you are not required to generate an e-invoice. So the requirement to generate an invoice is only for B2B transaction, and that too for suppliers doing more than 50 crores. And this 50 crores is any of the previous financial years, starting from 17-18 onwards. It could be 17-18 or 18-19, 19-20 or 20-21. So I would like to just say, so we are on 2nd April 2021. So even the last year 2021 has to be taken into consideration. Practically what's happening is the department is proactive. In GSTN itself says you are required to raise an e-invoice. There is an alert which is coming in GST login. But then for some taxpayers who has not crossed 50 crores in any of the previous financial years, let's say 17-18 to 2019-20, but they would have crossed 50 crores in this financial year 2021, there may not be a pop-up coming in which the government has also given an option for availing that e-invoicing facility in their GST login. We'll talk about that a little later. Now, some of the issues which we find more important, interesting, practical challenges is that, so let's say the goods are moving on the last day of the month, let's say 31st of March 2021, the goods are moving, and the invoice we are supposed to raise on 31st March. If I am raising an IRN, let's say by mistake there was a delay, so I could raise the IRN only on 1st April. I mean 31st March technically doesn't require. So if I am raising the IRN on the next day, then what would be the impact? There's a big impact. Why? Because only after the IRN is printed, I would say in QR code form, if it is printed, only then it will be treated as a valid invoice. So the invoice date is of course also relevant for taking the input tax credit. So especially if it's a month-end transaction where it requires that you need to be very careful, where they have to ensure that the IRN is generated in real time, the reference number is generated in real time. Otherwise, there is every possibility the recipient might end up losing input tax credit for that month. Though invoice could be there physically, because of the absence of the IRN the same date, there could be because only after the IRN is printed, there's a specific rule which talks about IRN being generated at the time of preparation of invoice. So while preparing the invoice, we need to have the reference number which is mentioned there. So after that only we can consider that as a valid invoice based on the total input tax credit eligibility will also flow in. So it means if it's a 31st, let's say 30th April transaction, but the IRN generation dated is only 1st April, 1st May of the next month, then naturally it means the eligibility to take credit also gets a hit. So we need to be really careful, especially it's month-end transactions which are going to happen. Now, some of the key points. See, the government rolled out this e-invoicing. The audit trail is already established. We all know that at some point in time you will see governments giving a already most of the information is getting linked. We have the TAN, we have the PAN and GST data is getting merged. And of course, at some point in time, the government will also give us the entire, to some extent, our expenditure also and our income also. So that's how the trend is. And there will be an indicative income and expenditure statement the government might also come up with in some years down the line. That's how the tracking is going on. Just to give an overall statistics, the government says that this is the statistics government. So the total GST revenue which has been generated from various constitutional business, though this necessary to have accounts, we need to have the audit trail from 2022. Just to keep the statistics, the government says, the statistics says about 63% of the GST revenue for the government comes from companies. Just to put it simply, so 63% of the GST revenue for the government comes from the private limited or public limited companies. And this 63% is already having an audit trail, because very simple, all your transactions are already recorded in GST portal. And of course, we are going to record B2B separately and B2C bulk. But this 63% is already revenues, already having a reasonable audit trail in the government's portal itself. And this 63% of the revenue comes from just about 6.5% of the total GST registered taxpayers. 6.5% of the taxpayers pay about 63% of the revenue. So you can look at that Pareto rule being very effectively used. And we look at the proprietorships having about 80% of the registration, contributing just about 13% of the revenue. So for the government, taking the apple quite easily, the low ranking apple is what easy to track, and the government already has an audit track on about 62% of the businesses for which they are more concerned with as regards GST is concerned. And in addition to that, this is just about the constitution-wise contribution the government has contributed. Another key stats as on 28th month, of course, is picked up from the GST portal, is that you can look at the statistics here. There is about 1,195 crores of invoices which has been shared in the government's website. 1,195 crores of invoices. Please remember, this is not the e-invoicing total, but rather this 1,195 crores of invoices data is available with the GST information, GST portal. So you look at, we are about 365 days by roughly about 4 years. It's going to become 4 years next 3 months. So we are looking at about 1,400 days or so. 365 into 3 plus another 240 days. So you're looking at about 1,350 to 1,400 days. So in 1,400 days time, the government already has data of about 1,195 crore. Which is about roughly, I'm looking at only B2B. I assume government has a record of only B2B, which is about 85 to 90 lakh invoices per month is what the government has the data. Now, out of this 85 to 90 lakh invoices per month, which per day, which the GST already has the data, e-invoicing has now been made mandatory for companies more than 50 crore, which would effectively cover 50 to 60% of this invoices. So invoicing will cover about 6 to 7, in fact could even be more, at least 60 to 70% will be covered. Just to give another statistics, this is also by the government, the invoicing till November 30. Now please remember, till November 30 people of more than 500 crore only was covered, which is about 20,000 GST numbers. But then after January they have covered another 100 crores, which will cover about 90,000 GST numbers. And of course, from yesterday onwards is going to cover at least the double of it. So for 20,000 GST number itself, the number of invoices which the people are generating is roughly about 2.7 million per day. That is about 27 lakh invoices per day out of the total 85 lakh invoices. Now, by now, this would have easily comfortably crossed about 60 to 70%. So the government already has established a very strong audit trail of all the B2B invoices which has been raised. The concept of audit trail, of course, though could be new from the context of the Companies Act perspective, as regards the GST perspective has substantially been established from yesterday onwards. I would say about 60 to 70% is already done. The government's job is done. And of course, based on this only input credit also flows. So 70% of the, of course, B2B invoice the only base to take input tax credit. So the government also now kind of has a statistics on 70 to 70% of the invoices for which input tax credit has been availed or not availed, and that data is available real time with the government. So audit trail at least could be a though it is captured, it could be more of a post-mortem requirement for us. But then this is a real-time information the government already has as regards the GST invoicing is concerned. So considering these factors in place, it is not very it will not be too late before we have the government giving us more inputs, information, data analytics in this regard. Of course, who is required to generate e-invoicing is primarily for B2B transaction and exports. We are required to generate e-invoice only for 3 situations: invoices, debit note, and credit note. Only for 3 purposes. Delivery challan doesn't require an e-invoice. So only for these 3 situations we need the e-invoice to be raised. And of course, the invoice schema has been given. It is more of a software process, and we are not uploading any invoices to the government website, but rather we are only giving the information of every invoice in the GST website. So there's a separate portal they have notified, and through that portal, there are about 10 portals that are notified through which it has been shared. And whether the government has given any specific software, yes, they have given it as an offline tool, but of course, which can manage only about little number of day-to-day transactions. If it's a huge number of transactions, entities have to go for a specific software which can link it to the government's API portal. So invoice, debit note, and credit note. Only 3 documents require the e-invoicing to be generated upon. The one important question is that who are not required to raise invoice. We know insurance companies doesn't require, banking companies, GTA, etc. One of the questions which came up was, sir, I am a businessman. I am doing a GTA service. I am also doing a CHA service, that is customs clearance broker. So I am doing both customs clearance also, GTA also. Should I go for an e-invoicing solution or not? Was the question. The exemption has been given by way of a reference to the rule. So it says that as per in rule 48 where they have given the exemption, this is other than 4A, 4B, 4C. So primarily it is 4A talks about goods transport agency. So only for the goods transport agency the exemption has been given, but not for others. So it is always advised for other than GTA services, it is required to raise a e-invoice also. So it is must raise an e-invoice for other than GTA services. This question came up even for a banking company. So a banking company might also have other transactions, like they also have FASTag. They also have non-banking, like they get commission for mutual fund, they get commission for various services they provide. They charge fees for those services, portfolio management fees, etc. Now these are all non-banking transactions. I would say not related to their banking business, but should they require to raise an e-invoice? This is an open issue. But then the government gave a list of companies who are required to raise an e-invoice. None of the banks were present. None of the banking companies' name were present. In fact, by reading by the law says that banking companies are not required to give an e-invoice. Of course, where for GTA, it doesn't talk about specifically at the entity level, but rather it talks about GTA, Goods Transport Agency. Whereas at the banking company level, it talks about the entity legal status, which is banking company. So, none of the banks have been issuing e-invoices. And in fact, that is also fortified by the government's list where they didn't mention any of the banks as requirements for e-invoicing requirements. So banking companies in general do not comply with this provision because it's a blanket point which has been given. But of course, GTA, they need to be really careful because it is a status which has been given. And in case of passenger transport service, not required, STZ units. Now, STZ can give, developers are there and units are there inside the STZ. So who has been given exemption? Only those units which are in the processing zone. And the STZ developer who is going to raise invoice on STZ units must comply with the e-invoicing provisions. They have not been given any exemption in this regard. And one interesting point is that third parties raising invoices on STZ also have to comply with the e-invoicing. It's only for the STZ units the exemption has been given from e-invoicing regulations. So this is primarily the exemption. So it's better to pay them for the GTA. It's better to go for it if they are having non-GTA activities. And one other point is that what if my services are covered under reverse charge mechanism? Let's take the example of a sponsorship service, or let's take the example of an advocate, or you take the example of recovery agency services, etc. Now, in all those cases, let's say I am a recovery agent and I am charging commission from my banks for doing a recovery of loans. Now that portion is covered under RCM. I am also doing telecalling services wherein I am required to pay GST. Now this telecalling services will attract forward charge, whereas the recovery agent will attract a reverse charge. But both these put together has crossed a 50 crore limit. Should I raise an e-invoice? Yes, of course you have to raise an e-invoice, no doubt. Now the next question is, should I raise an e-invoice only for the invoices under forward charge, or also for the invoices under reverse charge mechanism? So whatever invoices for my outward supplies, simply put it, the law says all B2B outward supplies will attract e-invoicing provision. It means even if my transaction is coming under reverse charge mechanism, that is, I'm not going to pay GST, whether my recipient is going to pay, still it will attract the requirement to have an e-invoice in place. However, where transactions I have to pay under reverse charge, that I don't have to raise an e-invoice. We are already supposed to raise a self-invoice, and that self-invoice need not be an e-invoice. So it's mainly for the outward supplies. Whether I am paying or my customer is paying doesn't matter. E-invoice becomes mandatory. So this is something which all other RCM entities also have to be carefully looking at, including, of course, for goods. So this is another important issue which comes up. And some of the major questions which come up before that, of course, you can verify the e-invoice through an app the government has given. In fact, you can go to the Google, you can, Google or Android, you can just search e-invoice verifier. You get an app of NIC, or you can go to the website and you can give your mobile number and generate that app. So that app is available for you to verify whether a particular invoice is properly valid or not. So that is something which can be verified through the app. And of course, you can have your own software to do that. Now, by now, most of the companies, Tally has brought its own, and there are every software has brought their own patch for the e-invoicing. And of course, there are third-party vendors who links the website, the software to the government's portal. Some of the issues which we kind of come under is that whether exempt supply, does it require a e-invoice? The answer is no, because exempt supply requires only a bill of supply. It doesn't require an invoice to be raised, and hence e-invoice is not required for the same. Whether reimbursements, let's say there's a customs broker and he is charging reimbursements on pure agent basis. Should he raise an e-invoice? Not required again, because reimbursements technically is not a supply itself. It's only just a recovery of my expenses paid. And if it's on pure agent basis, it's not even a supply, and it doesn't call for an e-invoice to be raised for the same. Hence, e-invoice is not required where it is a bill of supply. Self-invoice. Now, it's very important point is on the context of self-invoice. So many of us comply with this RCM provisions where we are required to discharge GST under our own, like advocates or GTA, etc. In all those cases, we have required to raise a self-tax invoice for the same. And those self-tax invoices can be only, of course, our own system-generated invoices. E-invoice is not required. Here, I would like to please mention that the starting number and ending number of the self-tax invoices is required to be mentioned in our GSTR1 also. And it is very important we raise this invoice, because the eligibility to input tax credit for RCM transactions is not based on the challan, but rather it is based on the self-tax invoices which are being raised. So it's very important that the taxpayers raise a self-tax invoice for each and every RCM transaction, or at least consolidated basis end of the month. They have to raise a self-tax invoice so that the eligibility to input tax credit cannot be questioned. Okay. Now, of course, payment voucher, receipt voucher, delivery challan, invoice come bill of service. So these things doesn't require the e-invoices. And of course, in case where it is invoice come bill of supply, it is always advisable to raise a e-invoice, because it does have a taxable component included there. Now, the next question, RCM supplies doesn't require an e-invoice. I am importing some goods or services. Should I raise an e-invoice? Not required. And if you are buying from unregistered persons, e-invoice also would not be required. So this is RCM supplies doesn't require an e-invoice. It is not so. The third important issue is that can e-invoice be cancelled? Now, before proceeding to that, can invoice be cancelled? The next question. There is no express provision in the law which says that you can cancel the invoice. When we look at comparing this with the erstwhile central excise law, we used to have a specific provision where they say you can cancel the invoice, and which has to be submitted before the excise authority within 24 hours and get it ratified, etc. This procedure is there in excise. However, similar provision to cancel specifically, an outright provision is not there in GST. So normally cancellation is only by way of a practice, an established practice how we cancel an normal invoice. So same procedure for an e-invoice to be cancelled. You have a time limit of 24 hours from the time of generation of the e-invoice. Within 24 hours, the e-invoice can be cancelled. Now, another important point is what will happen after 24 hours. Of course, you cannot cancel the invoice, and naturally this information will go auto-populated to our GSTR1, and we have to only make corrections in our GSTR1 and not in the e-invoice. So any e-invoices after 24 hours cannot be cancelled, and that information logs as a trail in our GSTR1, and you will have to make at a 0. And one interesting confirmation the government has given is that once you raise an e-invoice which you could not cancel it, but you amended that in your GSTR1 and made it a 0, that will be flagged as an additional information to the tax authorities. It means it becomes an additional audit point for the department to pick it up. So this is a point. So you can see a lot of audit trail already been established in the GST system itself. Now, what if there's a small correction? Let's say instead of 10,000 rupees value, I would like to only put it as 1,000 rupees, or the rate is different, etc. You cannot amend the e-invoice. You can only cancel it. So you have only two options: raise an invoice. With the e-invoice, if it's goods, raise e-payable, send it to the customer. Or e-invoice is wrong, cancel it within 24 hours. That's it. The matter ends there. You don't have an option to amend the e-invoice. If you would like to amend the e-invoice, let's say 24 hours has gone and you have not amended it, so you can go ahead issuing the e-invoice and you can make the correction only in your GSTR1. So in filing GSTR1, e-invoice can be corrected, but then that will be flagged in the office's view. So this is another audit log which comes into play. So cancellation is not possible. So earlier what we used to do is that next issue would be, let's say I generate invoices number 100 in my system and it was transmitted to e-invoice portal real time. Now as 101 I generated in my system, but then it was not transmitted to the GST portal and I cancelled that invoice. 102 I generated it and transmitted it. So naturally that is also an audit log. So it's very straightforward audit log. The number 101 is generated and not transmitted to invoice. Could be two reasons. One, you generated it, but then it was a wrong invoice. So you cancelled at the source system itself. That is at our system itself. It was not transmitted. Another point could be that it got transmitted and cancelled. Both ways, it becomes an audit log for the department to understand. So this is an important point. So cancellation after 24 hours is not possible. Amendment is not at all possible. You can only cancel it within 24 hours. Now, another point is that with e-invoice itself, you can auto generate e-payable. So there is no necessary that you have to do one more entry in e-payable. It's not required. So e-invoice will lead to e-payable also. If you have generated the e-payable, you can't cancel the e-invoice also. So if you want to cancel the e-invoice, first cancel the e-payable within 24 hours and then come and cancel the e-invoice. Or if the e-payable is on way verified by some officer, then the matter ends there. The cancellation is not at all possible. So it's a very strong system, or I would say real-time information has to be done in this regard. Most important of this issue, practically we find this issue is quite long time, is that can an IRN date is the invoice reference number date, so which is given by the portal, the reference number which is generated by the portal, can it be after the invoice date? For example, let's say the invoice date is as I told you 25th of April 2021. Can I generate an IRN let's say on 27th or 28th? System permits it. Okay, as it stands, the system practically permits it to be done, but then it says that the invoice shall be prepared. The wordings used in the law, though there's no obvious clarification from the government, the invoice shall be prepared after obtaining an invoice reference number by uploading the information contained in the common GST portal. So for all practical purposes, the date on which the invoice reference number is generated, after that only that invoice is valid. So that date only will be considered as the validity of the invoice. Even if you mention invoice date to be, let's say 3rd or 4th or 5th of April, doesn't matter. That is not at all relevant. So only after the IRN is generated, it becomes a valid invoice. So you cannot say that I raised invoice today physically and then I transmitted 2 days later and then I generate an IRN. So this will be definitely considered as a violation only. Though of course initial government gave a grace period of 30 days to raise it. That's only for October 2020. They gave 30 days time to raise the invoice. But then after that, everything has to be done on a real time basis. It has to be done. So this is one key point we need to note. So practically there have been delays. There are people who are not able to generate, especially day-end transactions where server is not working sometimes, etc. As per the report, only 15 to 20 minutes of the downtime is reported for. That's the NIC statistics. But then if there are requirements, it's required that it has to be done on a real time. So practically, of course, it has to be managed for. Now, another issue which can come up with, as I told you, is the recipient hands input tax credit might get deferred. If especially it's a month-end transaction, it might be deferred. So it's quite important that especially month-end transactions, they are on top of things, and there's a cutoff time. They may have to keep a cutoff time in generating the invoices as well as with the IRN number. Now, should I print the invoice reference number? Not required. The QR code is only mandated requirement in the law. The invoice number can be, if you want, you can print it. In fact, the format of schema requires mentions the IRN number and date of generation. But then the rule requires the QR code to be embedded. So the QR code contains the details of the invoice which is raised. So that is more important to be remembered as regards the this is considered. So for all practical purposes, invoice date, IRN cannot be generated after a long time. And most importantly, though they have not mentioned what the time limit of generating a e-invoice, there is a time limit for generating invoice, which is in case of goods before it is removed. In case of services, we have within 30 days to raise the invoice. So the word invoice there represents the invoice in compliance of the e-invoicing regulations. So it means, let's say, if the goods are moved with a normal invoice and then we are raising the invoice, it will be landing up in problems. Same way, services, 30 days you raise the normal invoice, but then after 30 days we are raising an invoice. That is also an issue only. So it's very important that the IRN happens parallelly with the e-invoice, regular invoice date also. So that is another important point, practical issue which we might face as regards the invoice is concerned. And of course, you can verify the eligibility to invoice. The government itself has listed it. And as I told you, the banks are not specifically listed, could also be because of the exemptions which has been given specifically. Now, in case if the particular taxpayer has not been specifically flagged, though is required to comply with, then there is an option which is given in the e-invoice portal where you can enable it. So there's a website which is given, einvoice1.gs.in home enablement, through which the invoice generation you can opt in for the e-invoicing provisions as such. So as mentioned, the next issue would be on the debit notes or credit notes. That is also requiring a e-debit note or a e-credit note only, without which it is not valid. Financial credit notes, where let's say I'm giving a debit note which is without impact on GST, or a credit note without the impact on GST. Of course, you don't have to give a generation of that debit note or credit note. So we don't require a physical one. And wherever transaction, let's say it's between branches, if they are having a separate registration and of course you are raising a proper invoice for it, e-invoice also becomes mandatory. In fact, IRN number is 15 digit, and of course there's a hash which is generated, it's about 64 digit, and it is required that the 15 digit can be referred for EC verification at later point in time. E-waybill can also be generated through e-invoice also. So as to put it, roughly government already has on a real-time basis from 1st April, I would say about 60 to 70% of the tracking government already has on real-time basis. So the government's eligibility to input tax credit, all those documents, the government already has a real-time record of about 60 to 70% of the transactions are captured real-time. However, as I told you, because the amendments made, the e-invoice becomes quite important that it has been remembered in this regard. Some of the issues which we also come across related to the invoice is that the input tax credit eligibility for the recipient, not just for the e-invoice situation, but then if there is a e-invoice, what happens is once the invoice is generated, automatically it goes to the GSTR1 data. So if it is quarterly, means it goes to the invoice furnishing facility through which it gets transmitted to the recipients 2A. So whatever I upload, it goes to 1, and from 1 it goes to 2A. This is how the process works. From 2A it goes to 2B, and based on 2B is what we take the input tax credit. Okay. Now one question which arises is that for some reason, let's say this transmission has not happened. For some reason, that is what I have uploaded in my one has not been transmitted to the recipients 2A or 2B, or I have uploaded little belatedly. So what has happened is that it got transmitted little late after the 2B's date. Let's say 2B's date is 12th, and after the 2B's date only it got reflected in my recipients portal. So what happens is, what will happen to the recipient's input tax credit? Normally there is a specific rule, we are aware that the recipient's input tax credit is based on the suppliers uploading in the GSTR1, which is popularly we are aware. And that is rule 36 sub rule 4. And now from January onwards, they have shrinked it to 5% is the gap which has been permitted. In fact, in this budget, they have made an amendment in the section 16. Section 16 is the credit eligibility section. So in that section 16, they made a specific amendment and included one clause where they said that the central government can prescribe the percentage of credit which can be availed by the recipient based on the invoices furnished by the supplier. So the central government has been given powers, and in fact they can also say that it can be only 100%. Now it is presently 105%, but then it can become 100%. The central government has been empowered to do that also. Now that has led to one consequence. So whether that input tax credit, which we are saying as eligible only based on e-invoice, that is fine. E-invoice has to be there. There is no doubt on it. But then whether it should reflect on or before that 12th of that month, or it should reflect on or before in my GST R1, so that it becomes eligible, has been a matter of debate. And this budget amendment makes a strong case for that also. The budget amendment has enabled powers to the central government to prescribe the effective percentage which can be in variation between what is there in uploaded in one versus what is there in our as per our records, as per our books of accounts. So this is because of one of the issue which has been raised, or there are a lot of already a challenge being done to that rule, where presently the matching concept is done through this rule 36(4), and this rule 36(4) is already being challenged in quite a few high courts on the ground that it is ultra vires section, because the section 16 gives powers only for prescribing the form and manner in which the input tax credit can be claimed. The section does not has given additional conditions which can be prescribed over and above what is mentioned in the section 16. So this is one of the ground on which the rule 36(4) has been challenged. To counter this argument, the government has brought this amendment in budget. So whatever amendment budget made in budget could also be an indicator that there is a potential lacuna which can come up, or potential gap in rule 36(4). So the rule 36(4), wherever there is an insistence that we can take credit only based on what is there in our 2A or 2B, may also be challenged. In fact, we ourselves have quite a few writ petitions on this matter at various courts, where the issue was whether 236(4) is ultra vires law, and on which grounds, of course, though it is various sub judice, there are enough arguments to say that it is beyond the powers and it could be taken credit even if it is not there in our matching. Even if it's not matching, the credit could be eligible, because the government itself has made its intentions clear by amending the law. The government view could be that the amendment made through this budget for enabling matching could be a clarificatory amendment which will have a retrospective impact. But then, being a substantial condition, it might have to be interpreted only as a future amendment. So if somebody is taking credit based on the physical invoices which they have, and of course based on the e-invoices generated but not reflected in 2B etc. on particular date, they may still have a valid case if the rule 36(4) has been challenged. So that is one point I would like to clarify. The second point is that on of course now the audits have started, the departmental audits have also been started, and there have been quite a cases where the reverse charge liability has been discharged very belatedly. There are cases where recipients are not aware, so they did not discharge the reverse charge liability, and it got discharged only very recently or in last few months, or only during audit etc., which means way beyond the original time limit for availing that credit. The original time limit for availing the credit was September or October of the relevant period, but then we are being today only can it be eligible for credit, and that is where one of the observations made some time back is relevant, where we told that for reverse charge cases, it is required that the credit is not based on the challan, though the credit is subject to payment of tax. You have to pay the tax, then only you are eligible for credit. But the eligibility to credit does not arise based on the payment of tax, but rather the eligibility to credit arises based on the self-tax invoice which is generated. And one of the points we saw is self-tax invoice doesn't require a e-invoice also. So it means if you are having a self-tax invoice dated today, let's say I'm paying that reverse charge liability of financial year 1920 today only, and I am raising a self invoice on today's date. Will it be an eligible credit or not? Number one, of course, it is beyond the time limit for issuing the invoice. In fact, you are supposed to have issued the invoice at that time. Yes, there is a violation, or I would say, the invoice has been raised belatedly. But then, whether the invoice raised, which is today, is it eligible for input tax credit? Yes, because for this invoice, the time limit happens to be next September 2021. So it means that there is a valid case for taking credit based on where, of course, it doesn't require an e-invoice. A normal invoice which is raised on today's date, but then related to the previous transactions, would also be qualifying for eligible for input tax credit. So a normal self tax invoice raised today for past input tax credits on RCM would also be eligible for input tax credit. So though of course department might take a different stand on this matter. The third issue which which we are facing is that for imports, in fact, there is another amendment made which is also relevant in the context of e-invoice. Is that let's say I have an invoice dated 31st of March 2020. Okay. Now for 31st of March 2020 invoice, I am raising a debit note only on 1st April 2021 with the GST. There's a price increase happening. So I am raising a debit note only on 1st April 2021. So 31st March 2020, my original invoice was raised with GST, let's say, of 1 lakh. I'm now raising a debit note plus GST only for that particular invoice dated March 2020, which is for another 1 lakh rupees. Now the question which comes in is, first point, can the recipient take input tax? Because we all know that debit notes or credit notes have to be captured on or before September. This is what we all are fully aware. And of course, it has to be recorded in our GSTR returns before September month returns. September month returns you have to record. Okay. So the recipient cannot take input tax credit after September month. So March 2020 is the invoice. If I am raising it on April 2021, can I take input tax credit or not? First, first point, of course, it will require a e-debit note to be raised. There has to be an e-debit note which has to be raised. But having raised a e-debit note, because of course the debit note is raised after 1st April, and this will definitely call for a e-debit note be raised. Now, when you're raising an e-debit note, now whether the recipient will take gets the input tax credit. Of course, once I raise a debit note through the invoice reference number, automatically it gets reflected in my recipient's login. So can the recipient take input tax credit? The answer is yes. Okay. Then what happened to that September month? As you are aware, that there is a budget amendment made in 2000, not budget amendment. There's an amendment made in 2018 itself in the CGST Act and in the GST Act, where they said that for time limit for debit note is not based on the invoice time limit to which the debit note pertains, but rather based on the date of debit note. So they basically delinked the time limit for debit note from the time limit for the original invoice. So this delinking happened in the law, but of course it was not notified till December 2020. From 1st January 2021, that particular provision has been notified. It means that even if a debit note is raised on 1st April 2021 pertaining to an invoice related to March 2020, the credit eligibility for the recipient is intact. So imagine a scenario where the same debit note was raised on 31st December 2020. There is no eligibility because the provision was not notified. But then post 31st December 2020, 1st January 2021, we have that provision which is being notified. So it means any debit notes raised would also be eligible for take credit. Of course, it could also pertain to periods prior to the GST. I mean, could be related to invoices prior to this notification. So from 1st January, this become applicable. So two learnings here. One is you have to raise an e-invoice or e-debit note. Second is the recipient's eligibility to credit still remains intact because of the amendment made and notified, in fact, from 1st January 2021. Now, the next issue comes in is what will happen to the credit note. Let's say I raise a credit note. As we told, if it's a financial credit note, there is no requirement to raise an e-invoice. So 31st March 2020, there is a sale happened. Now I am going to what happened typically, practical issue. One happened yesterday, one one dealer called up and he had this issue. But the issue was 31st March 20, February 2020, he has sold the goods. Now, in January 2021, the recipient is returning the goods, basically. So it means sales returns. Now, I'll be raising a credit note with the GST only because recipient has not taken the credit at all. And of course, he would like to return it back. He's returning it back. So naturally, I have to raise a credit note with the GST only. So February 20, the transaction happened. We all know that the credit note has to be recorded in my GST returns, which is before this September month. That's all we are aware. Now we are raising credit note today with the GST. First, of course, because it comes with the GST, if e-invoicing provision is applicable on January or February, you have to raise with e-credit note only, number one. Because debit note, credit note does not directly link it, it doesn't go and search the original invoices. So that is only what we are giving it. So that is number one. Number two, so we have to raise the e-credit note. Number two is that can I go and adjust my GST liability in the month of, let's say, credit note was raised in January 2021. Can I go and adjust it in my January month liability? The law says that for credit note, time limit for disclosure, time limit for disclosure is September month of the financial year to which that invoice pertains to, which means already over, last year over. And it should be adjusted in tax liability also, which is also over basically. Recipient can reverse input tax credit anytime because anyways credit note is issued only in January 2021. But what will happen to the supplier's liability? So in such cases, the best option which looks suitable is that they may have to opt for a refund scenario as if it is an excess tax paid. Naturally, it's an excess tax paid because there's a supply made and there's a return of transaction happened. So if you want to go for a adjustment in the liability, that is practically not legally not permissible because the time limit is over in September 2020. So in which case the refund is the best option available. Of course, or otherwise the recipient has to book it as a sale transaction, which in many cases the recipients may not be willing to do. In such cases, the supplier has to apply for a refund under Section 54. Now, please remember what the credit note provision says. The 3031, the provision says is only that you cannot adjust the tax liability. It does not say that you cannot even go for refund under Section 54 as excess tax paid, provided of course you prove unjust enrichment and say that recipient has not taken credit and CA certificate has been obtained and proved, then the supplier can opt for refund scenario. So what we are trying to communicate is that even if credit note is raised after e-invoicing period, you have to raise e-credit note, number one. Number two is that if it is with GST, of course, you can claim the refund of the same, but not adjust the same in our tax liability. So this is another point, especially where the credit notes are raised post the September timeline period. So that is another point which becomes important. One other situation which has come up was for imports, do we need e-invoice? As we said, no. For imports, it goes through bill of entry only. So government already has a trail of the bill of entry, so it doesn't require an e-invoice. But then should we at all have the e-waybill is required? Yes. So you have an e-waybill, you don't need an e-invoice, you have the bill of entry. So based on that, you can take the credit. Whether the time limit for how do I calculate the time limit? You have time limit for taking credit, but then the time limit for taking credit for bill of entry may not apply because the provision is restricting itself to invoice and a debit note. Of course, the government, the reading could also be, it includes the invoice, but then the restriction has been made to only invoice and the debit note. There is no extension to bill of entry. So if any credit has been taken on imports based on the bill of entry, even beyond September, it could potentially withstand the test of law because of the the wordings which has been used and intended. In fact, similar provisions had been there in the S12 CENMAT credit rules also. And CENMAT credit rules are also mentioning about invoice only, where bill of entry has been missed out, and there are precedents where it was being held as eligible beyond the statutory time of that September month. So imports could still withstand test of law even if it is beyond the time limit. And as I told you, any debit notes, credit notes raised post the e-invoicing requirement, it has to be e-debit note or e-credit note only, even if the original invoice happens to be a non e-invoice. So that is another important learning which we need to keep in place. And finally, of course, the taking credit has always been a matter of dispute. In fact, whether should I, when I say taking the credit within September month, it means taking credit in my electronic credit ledger or taking credit in my GST or 2A or 2B. See, when at one side the department has been, government is considering 2A or 2B has to be a valid document for the purpose of matching the credits. Okay, that is on one side. Though of course there's no statutory backing to 2A. There's only a statutory backing to GST or 1. There's no statutory backing to 2A, but still at one side when the government takes the comparison with 2A, whether taking credit means taking credit only in electronic credit ledger or taking credit in showing or automatically displaying in the 2A, or of course there are a lot of records which you maintain under section 35, which includes input credit register, output tax liability, and we also maintain stock register, goods inward register, etc. So one of the register happens to be input tax register, where we list all the input tax. Or can we say that taking credit in books itself amounts to taking credit compliance with the requirement? Of course, this is a very high matter of debate, but then these are all issues. Already department started issuing notices on taking credit beyond the time limit of September. So taking credit in books, there are precedents in the old SINVAT credit rules, but of course SINVAT credit rules, the footing is a little different. In SINVAT credit rules, we have the service tax returns or the excise returns through which the credit was claimed, and there are some precedents where taking credit in books has been held to be taking, because books is also considered as one of the valid registers or records to be maintained under the provisions, which is similar to what we have in section 35 of the GST Act. So because taking credit in the books is also being considered as a valid eligibility for credit, this also could be a potential matter when notices are being issued on time limit, that can also be replied to with the basis of taking credit in the books of account. There is a Karnataka High Court judgment also on SINVAT credit, where they held that taking credit in books will be valid basis for SINVAT credit purposes. But of course, GST stands on a little different footing, where they say electronic credit ledger. But then this is another open point where there could be a defense which can be put forward from the taxpayer side. So overall, to put it, the e-invoicing has already established, as I told you, about 80% of the businesses or invoices raised already has an e-invoicing provision which has been there. So considering which has already been established, of course soon, maybe after some time, the government will bring in the next slab. Now it's 50 crores, the government might bring in 25 crores, and slowly they will start lowering the limits over a staggered period. But this has been one of the successful, I would say, implementation. Though of course 50 crore, 100 crores will have a strong technology base, or at least people to advise them. Still, this has moved quite seamlessly, and we don't find much of issues. Of course, there are some teething challenges. Having said that, considering a huge transition here, we don't find much of challenges. So naturally, this is something which the government has built up, and you also have NIC, which is there. The NIC is the authority which manages this e-invoicing portal, and they have done a strong job in ensuring that downtime is minimum, and also effective output has been delivered as such. So we would request you, my humble suggestion would be to guide the taxpayers on this process, and especially please start focusing on month-end cutoff transactions, where the credit eligibility has already started becoming an issue for the recipient. This also has to be quite we have to look into, and please watch out for the notification of the amendment as regards the detention procedures are concerned, where the provision has been substantially modified, which could be highly counterproductive. So this you may have to keep advising the taxpayers in the right footing. So on this note, I will close my discussions here, and thank you so much, Talapati sir, Bannaraj sir, and SARC, and also for all the members for having patiently listened, and also for this opportunity to share my thoughts. Thank you so much.
Sir, I'll start sharing the questions, sir. Okay, 1 minute. Sir, is my screen visible, sir? Sir?
Yeah. So question number 9 is turnover limit is for And recipient of e-invoice, as we told, we have to look at the aggregate turnover from supplier angle. So it means that we have to see all the outward supplies alone. Inward supplies need not be considered for this transaction. So all outward supplies have to be considered. RCM supplies need not be considered for decided this limit. The next question is a private limited company running a mall with parking facility and a hypermarket in the mall. Apart from shop rentals from other vendors, if previous year turnover is greater than 50 crores, for each invoice issued to walk-in customers at multiple point of sale of the hypermarket and parking exit point, e-invoice to be issued, how to comply? Okay. Say e-invoice is only for B2B transactions, only for registered persons to another registered persons. So if it is B2C transactions, e-invoicing requirement is not there. So it is only that the government proposed a dynamic QR code that is also for turnover more than 500 crores, which is also now deferred till another 3 months time. So as such, this requirement is not required for B2C invoices. So that is another point. The next question is, our client is a software export company following cost plus model. For rising invoices of a given month, books would require to be closed first to arrive at the operating cost, and it takes about 3 days after a month to compute the revenue. However, invoices will be raised on month-end date. Can the invoice be paid on month-end date or on 4th of the following month? Yeah. So as we mentioned here, the invoice is valid only after having the IRN and the QR code in its place. So without having the IRN code, it is not a valid invoice itself. So in which case, 4th of the month only you can raise the e-invoice, and only that will be considered valid. Or of course, you will have to book it as an unbilled revenue and then keep the valid invoice for the same. Or you may have to have commercial invoice, which is for compliance with your accounting regulations and for business transaction, and GST invoice. We are all aware that commercial invoice could be different from the GST invoice, especially when it comes to exports where the valuations could be different. So it is possible to have multiple, commercial invoice. And to address this situation, you can have a commercial invoice, which is only to comply with the regulations, and then the proper e-invoice to comply with the GST provisions. We are a company having SEZ unit and 3 other units which are non-SEZ units. Our consolidated turnover is greater than 50 crores. E-invoicing is applicable for the company. We are also having considerable exports. Yes. So for both the cases, see, aggregate turnover is at the PAN level. So PAN level includes all your branches, including SEZ units. So it will require an e-invoice. And on top of that, of course, for exports also, we do have to raise an e-invoice where you will account it as URP. For exports, though technically it is B2C, unregistered person, you will have to raise an e-invoice mentioning the recipient as URP. So we will require an e-invoice for export also. If the invoices are raised in March 2020, IRN done in April 21, will the ITC be lost forever? Yeah. So the recipient's eligibility to take credit will be in 21-22, not in that is basically April 21 returns. He can take the input tax credit. March 21 he cannot take the credit. There will be a timing difference which would arise because of this. How do the company ensure that where invoices are not received is actually a correct non-e-invoice? The problem is later it is found the vendor was supposed to provide e-invoice and not given. The company has to reverse the credit. It's been lost to the company. Okay, so here there are 2 options available. Number 1, the government has given a consolidated database in the e-invoice portal. The link is there in the presentation. So there is a consolidated list of people who are required to comply with e-invoice is listed, including 50 crores has been updated now. And of course, second option is to commercially protect the recipient by having a clause in place that in case if the recipient supplier is required to comply with provisions but did not so, then the respective amount will be debited. So there is only commercial protection. The actual list is also available in the government's portal, GST e-invoicing portal, and also you can check in their search taxpayer option. Now, if you search any taxpayer option, they have also given what is the turnover in the previous years. So you can also refer that and see at vendor level, maybe at the first time processing, whether e-invoicing would be required for them or not. The next question on self-invoicing like RCM, e-invoicing portal alerts, self-invoice. Yes, absolutely. E-invoice is not required for self-tax invoices. It's because it's only for inward supplies. So that doesn't require an e-invoice as such. In case of inter-branch state transactions, e-invoice required. Yes, if it is having a separate GST number, which in most likely you will have a separate GST number. then you are required to raise an e-invoice. The value shall be based on the value you have adopted as per the valuation rules. We have valuation rules 28 to 34 dealing with that cost, whatever fair price, etc. So that will be considered as the basis. What will be the transaction value given in the e-waybill would be, of course, based on the, if it is material, based on the material value, and same thing will be reflected for your invoices also. So valuation rules have to be adopted for the same. Time limit to cancel the e-waybill is 24 hours. If it is not cancelled, then the only option available is GSTR1. You can make it as 0. You can't remove it or delete it. You can make it as 0, and of course keep it recorded for future references. And in case if you have raised e-waybill and you have cancelled it, please have that in record, evidencing that you have not moved the goods. You may have to justify that the goods are not moved or services are not provided. As I told you, flagging is available with the service department to view that transaction. Whether one issue credit note instead of amending GSTR1, which is what has been popularly followed now, that if there is a cancellation happening, then credit note has been issued to cancel it. So there is one practical way to nullify it. Yes, it is absolutely possible and it is being done for the same. Yes, that has been validly done. Need a clarification on in case where the service invoice is to be raised based on profitability and computation takes a week's time. As I told you, 31st, yes, you can raise the e-invoice. As I told you, the e-invoice is only for the compliance with the GST requirements for eligibility input tax credit. The commercial invoice could all well be 31st March, but then your e-invoice, will be the valid invoice for your April transaction. So a suggestion would be that you will have definitely some slight difference in your reconciliation for the last month, because your e-invoice will get reported in April dated, and you will have March month invoice in your books of accounts. So in which case the reconciliation will be called for. As I told you, cutoff procedure is quite important, or maybe last month you may have to do it a little earlier to close it the year-end transactions, or maintain a reconciliation. It's not bad or wrong to have a difference. Only thing you need to have a reconciliation for the same. A subsidiary entity bills to parent entity both in India, cost plus margin, month expenses. I think it's a repetition. I mean, same as the earlier question. So IRN will be generated on 3rd. Only that will be the invoice you are going to report in your GSTR1. You will have a different reconciliation differences which you will have to report in your GSTR9 and 9C and keep it ready. Tax demanded under section 129. 50 lakhs is for 50 lakhs. It's not 50 crores. Any previous year, it's financial year 17-18 onwards to 2021. You have to refer 50 crores limit. The tax demanded under 129 could be adjusted against tax liability. It is in this context where the officer raises the demand towards tax and penalty on the portal, and either the supplier or recipient pays the demand in full. Will not such payment get set off against the demand raised by the officer, the supplier files GSTR1 becomes liable to pay the appropriate tax. Now in this case, it's a practical question where you discharge the tax on the particular invoice through DRC3 or through the demand raised by the taxpayer officer. In such case, what we need to do is GSTR1 you'll have to report it. GSTR3B you cannot report it because the tax has already been discharged. So you will have to have the reconciliation for the difference and justify it with your DRC3 challan or the tax payment challan. So there will be a difference between 3B and 1 to that extent, which you will have to reconcile in your GSTR9 annual returns. RCM e-invoicing is not done in the past. RCM doesn't require e-invoice, as has already been mentioned. It doesn't require e-invoice as such. So I think that in case of exports, the goods cannot be moved within 24 hours due to confirmation by the C&F agents. How to proceed with e-invoicing and e-waybill? Yeah, see, technically speaking, you are required to raise an invoice for movement of goods before the goods are moved. So let's say you are raising invoices for export purposes. It's called as a draft shipping bill. For draft shipping bill, you used to give one invoice. Let's say dated 31st March. But then your actual movement of goods is going to commence on 7th April only. Then your generation can happen on 6th April also or 7th April also. Only that will be considered as the valid invoices for the same. So I think 6th or 7th April you can raise the valid invoice in this part. So hope that kind of answers the queries has been mentioned there. Thank you so much, Panaraj sir and Dalapati sir.
Shall we conclude, sir?
Yes, sir.
Yes,
Yes,
sir.
sir.
Yes, sir.
Thank you so much, Srinivasan, sir.
So a great
Yes, sir. I
presentation,
request
sir.
the secretary propose vote of thanks,
Yes.
formal vote of thanks.
Yeah, Srinivasan sir, excellent presentation, very lucid and to the point. And I think we took a bit of your time in the first session. Somehow you are cut short of some time, but still definitely you have done more than justice. And we keep in touch with you, sir. Extraordinary presentation and so many queries, sir. 25 queries you have answered so quickly, and that's the great thing about you. Thank you very much for your sacrifice and time,
Thank you so much.
your knowledge, and it is so helpful to the members. As our chairman says, always speakers like you promote the listeners to come in good numbers. See, we have been seeing more than minimum is 500-600 members for any topic. So sometimes even thousands. So this shows the selection of topic meticulously selected by our chairman. Thank you very much, chairman, for the selection of the
Thank you,
topic.
thank you.
Thank you from the bottom heart for the excellent presentation by Srinivasan sir. You are the real backbone of these programs. And more than anything else, we should thank the delegates. Their participation is the real spirit and the strength for us to conduct more and more programs of this type and varieties of programs this type. So I request all the members to go through the April program list once and please register yourself in advance. Sometimes registrations are getting full and we will try to accommodate more numbers. Yesterday there was a lot of complaint that I received that many could not get into this one. We will take care of the registrations, the number of registrations next time with the support of the chairman and the technical staff. I also thank the office and especially Selva for giving this technical support. Thank you one and all for the excellent program for the day. Thank you very much.
Thank you so much, sir. Thank you.
Thank you, sir. Thank you, Srinivasan. Thank you.
Thank you, sir.
Good night.